Hey everyone, good to see you. So, something kind of surprising happened recently. Millions of Social Security recipients got an email straight from the Social Security Administration, and this wasn't to your usual update. This one made a bold claim. Under President Trump's new big beautiful bill, most Americans would no longer pay federal taxes on their Social Security benefits. Yeah, that's a big statement. If you saw the email, you might have had the same reaction a lot of folks did. Wait, what? Is that actually true? Well, the answer is sort of. But there's more to the story. So today, let's break it down: what really changed, who this helps, and what you need to know to figure out how much money stays in your pocket in 2025 and beyond. And real quick, did you get this email? Drop a comment and let me know if it caught you off guard. And if you find these kinds of plain English updates helpful, hit that subscribe button. I'd really appreciate it. Part 1: What the email said vs. what the law actually does. So here's what happened. On July 3rd, the SSA sent out an email praising a new law signed by President Trump, which they literally called one big, beautiful bill. It was signed on July 4th. In that message, they said nearly 90% of seniors would now pay no federal tax on their Social Security income. Sounds amazing, right? But here's the twist: that 90% number. It's technically accurate, but highly misleading, because the law doesn't eliminate taxes on Social Security. What it does is create a temporary tax deduction for seniors, starting in 2025 and ending after 2028. Part 2: What this deduction actually is. Here's how it works. If you're 65 or older, you can claim $6,000 if you file as an individual, $12,000 if you're married filing jointly. But there's an income limit. The full deduction applies if your adjusted gross income AGI is under $75,000 for individuals, under $150,000 for couples. Above that, the deduction starts phasing out, and if you're OG, it's $175. Zero single or $250,000 joint, you don't get the deduction at all. So for many seniors in the middle income range, this deduction could reduce or even eliminate the taxes they owe on their Social Security. Part 3: Who this doesn't help. Now, let's talk about who doesn't benefit. If you are under 65, like someone receiving disability or survivor benefits, you are not eligible. If you are in a very low income bracket, you likely weren't paying taxes on your Social Security anyway. And if you're in the higher income brackets, this deduction phases out and won't apply. So even though the email made it sound like a broad benefit, in reality, this mostly helps middle income seniors, not the poorest and not the wealthiest. Part 4: What didn't change. One super important thing: the core Social Security tax rules did not change. The IRS still uses the old income thresholds from the 1980s to decide how much of your benefits are taxable. If your combined income is over $25,000 single or $32,000 married, up to 85% of your Social Security benefits can still be taxed. So this new deduction, it's just a cushion on top of those rules. It might help you avoid the tax, but it doesn't rewrite the playbook. Part 5: The catches and the controversy. And yes, this deduction expires in 2028 unless Congress acts to extend it. So even if you benefit now, it's not permanent. And once it ends, the old tax burden snaps right back into place. There's also a lot of noise around how the SSA announced this. Some experts say the email felt too political, almost like a campaign message. And because it was so unusual, some people thought it was a scam at first. Plus, there's a bigger concern. Did this bill actually hurt Social Security's future? Well, kind of. Since some Social Security funding comes from taxes on benefits, reducing who pays those taxes could push the program closer to insolvency. In fact, Some analysts believe this could move up the exhaustion date from 2033 to 2032. That's just 1 year, but in this context, even a year matters. Part 6: What you should do next. So, what should you do if you're receiving Social Security? First, check your adjusted gross income. If you're 65 plus and under, that's $75,000 or $150,000 if married. This deduction might help you. But if you're unsure how it affects you, now is a good time to talk to a tax preparer, visit a local tax help center, or just start planning for 2025 taxes with this change in mind. And if you do your own taxes, keep an eye out for this new deduction starting next year. So yeah, the SSA email wasn't fake, but it was a bit too optimistic in how it described the law. This bill offers a nice break for some, but it's not a full tax repeal. And it's not forever. If you value this kind of clear, no-fluff breakdown, do me a favor and hit subscribe. I cover Social Security, taxes, and retirement updates in plain English. Have questions? Drop them in the comments or tell us if this bill affects your taxes. Your experience might help someone else out. Thanks for watching, and I'll see you in the next one.